Hey, good morning, traders, and welcome here on our live stream into YouTube for copy trading here at XM Global. And my name is Frank, and I will be with you for the next few minutes and give you a little bit of an introduction here into the copy trading module that was designed for that you could actually start to create a copy trading strategy, meaning like um, a kind of a passive income, meaning you are there's like let's first a little bit talk about what is copy trading. Copy trading means nothing else that you are looking here in the platform in the module where we are going in a minute into. You are going and checking out which traders you want to make money with. Yeah, so first of all, you need to do a little bit of a research because there's many traders out there that are providing service, giving you like um, a possibility to attach your trading account to their trading strategy. So that doesn't mean that your trading account is actually traded by the person. So you at any point of time have the full control of your trading account and on the assets. The only thing what you are saying is, hey, I like what this trader is doing. Yeah, for example, if you take now just here the first one that we are seeing, euro US dollar low risk, has a drawdown of like 36%. Not sure if this is low risk, but um and also like the risk evaluation with 10, so the name and the parameters is not really fitting, so I would skip maybe this trader and would go here for the euro US dollar 250, because first of all he does do nearly he even has more drawdown, but nevertheless let's think about it and say, hey, I like actually this strategy, so I would like to copy the trades that this trader is doing and want to be executed on my account as well. So and that means like that you're actually accepting. Oh, we have already here Galamacha with us. Hey, good morning, good afternoon to you. um, I hope you're doing all good and you are enjoying here the little introduction to copy trading. So enjoy, and if you have any questions, please ask all the time when you have some questions. So let's get back on that. So first thing, you are copying only trades. The trader itself who is providing the signals never had anything to do with your trading account. Just the trades that got traded on the signal provider's account will be mirrored to your account. You're participating on the performance. Secondly, you know, if this trader is doing a profit, he asks for a percentage fee of your assets, of the profits, not of the assets that are laying on the account, of the profits. And what is here applied is the principle of the high watermark. That means only, you know, only then, when we're going now into the profile here, for example, you recognize, or you can check, okay, what kind of performance this person did, in the last 7 days, in the day, and so on and so on. And then you will be recognizing, hey, $70,000 are invested in this trading account. You need to have like 300 as a minimum investment, and he asks for 20% of the profits, so 80% staying on your account. And if the trader is making a profit and the account is going up into a new record high. So let me see, this is your trading account. So you start here, right? So then the trader starts, is doing a profit, and your account goes up. So you first of all pay from this amount what you have a profit, you pay the commission 20%, and 80% stays on your account. But then what happens is he's going in a drawdown, and then he makes another win again. He will not get anything from the profits he did here, because you do not have a new all-time high on your account. Only then when the trader is coming back before he goes in the next drawdown, then you will pay the profit only from this piece what he earned on top. So by this fair model, it's ensured that you never will pay profits from money that was already taken for profits. Yeah, I hope you understand it. It's very important. It's a very fair setup what we're having here at XM Global. And so you only pay for the new profits, you pay the provision. And if you're then dropping again down and this guy is going in a drawdown, makes like this, so you don't pay profits anymore. Only then when you make a new all-time high on your account, then you pay again here, the 20% what this guy wants to have. This is the fees that you would have to pay. Anything else than that, there's no other cost that you would have to provide for the signal provider. The only thing that applies is the standard trading cost that you're having, of course, the spread, overnight cost, and so on. And that's literally it. So, and to get there, to copy this strategy, for example, you are just going ahead, pressing the button, copy here, yeah, copying like the strategy. And then you have like two selection possibilities. First of all, you have to at least put there into the strategy 300. This is what a provider asks for. Probably this is the risk management, how it's set up. And then you have the chance to select before, like you select either that you are investing or you are investing the amount, or you have a fixed multiplier. What's the difference? Very important. Please read carefully this information. What does it mean if you have like an investment amount? So that means the multiplier is always calculated like in this formula. It's always set in relation with the amount of the manager's equity. So that means that you are kind of participating in the risk settings the manager, so the signal provider, is setting for the strategy. Depend Independent if you put there 10,000, $20,000, or maybe only 500. There's always calculated the multiplier that the risk is accordingly. Another thing is, and here you see an example. Yeah, so if you invest $1,000 and the strategy owner also has $1,000, yeah, so you get calculated the multiplier with 1. But now it could happen that either you or the strategy manager are suddenly increasing the equity. So he puts another 1,000 there. So that means your multiplier is going down to 0.5. That means that otherwise you would have a much too high leverage on your account, right? So this is the multiplier function. And then you have the investor, you have still the fixed multiplier when you say, hey, you know what? I would always want to have only half of the risk, or half of you have a multiplier 0.5. That would means when you have the same amount of money on your account than on the investor account, you would only having actually like half of the risk. But be careful, when this guy suddenly increases now, again, the equity by a multiplier. So then you are anyway still going with half multiplier, but your risk increases as well because the risk of the base, or the amount of the base was increasing. And that's a little bit more tricky. So you can also read here the example. Multiplier 0.05 and manager by 0.0 lot gives you then the volume of 0.0005 and so on. So, and if you are too small, no position is open. So please read through this information carefully. It's very important to understand that. And then you are pretty much prepared to still say, okay, I would like to have a stop loss, a hard stop loss, if from my 300, 150 are gone, then I would like to get out of everything, right? So this is, for example, when you say, okay, 50%, not more. Be careful with that setting, because you have seen here that this guy is going with a strategy, and this is something what you can read here in the profiles. You see that he is going with drawdowns that are going as deep as 70%. So that means you are decoupling yourself when you're hitting minus 50%, which could be fine, but it seems like in this strategy, he needs to have like a drawdown of more than 50%, which in my opinion is relatively big. But you never know. No risk, no fun. Some people are thinking and they're going with such strategies. I would be rather looking for strategies that are the drawdown is a little bit deeper. And how to do that, we can say. William, comes to platinum. What's the third digit on top left and right of the screen? And what's up with the volume 1 to 100 and stop profit land? Where do you see now platinum? Actually, here. Let me ask you. I don't know exactly how I should answer you this question right now. I'm not sure exactly where you are, where this question is coming from. What's the third digit on top left and right of the screen? On the top left and right of the screen, and what's up with the volume 1 to 100 and stop profit land? I'm sorry. I'm lost with the question at the moment. I don't really have an idea what exactly you want to know because I didn't talk about platinum so much right now. Um, I was rather thinking about talking about a copy trading strategy, and there's also nothing from platinum right now. If you want to ask something about instrument specific, what I could recommend you, William, go to xmglobal.com, join the live education, and there you can ask asset specific questions to the traders which are like presenting there. You're using an app. You're using the app. But anyway, you're using the MetaTrader app, but here in the copy the XM app, you should be uh, I really don't know at the moment how to answer you that. I'm sorry for that. Because if I'm going here back to the copy trading platform, I don't see anything about platinum, right? So you might have here like different options. But you know what? Go to the XM live education or turn out to the XM support. They will be answering you this for sure. My job here is to give you a little bit more information about how to select a copy trading a strategy, for example. Because what you could do is as well here, you can say, okay, we talked about drawdown. You see here already like filtered strategies, best performers, yeah, high win ratio, high own funds, low risk, low drawdown, low fees, most popular, most invested, watch list, and so on. So you can first of all say, you know what, I would like to see a low drawdown strategy. And that means you are seeing here like, and you can still diversify your strategy in different asset classes. You can say, okay, I'm searching myself a person who trades in Forex. I'm searching myself a person who trades in um, indices. I could, search someone who trades in crypto and is doing algorithmic or commodities. Yeah, when it comes to commodities, then you could, for example, like William was mentioning, find someone who trades platinum, for example, or gold, oil, whatever. And here you can do a selection. So low drawdown. So you see here drawdowns 14%, 12%. Here's 7%, actually 8%, 6%, and you see as well in return the rewards. You see a little bit if you have a lower drawdown, also the returns are relatively okay, but they could be lower. This one here, he has a good one, right? He has 20% fee, a little bit of high fee, a high risk. This is a medium risk, a low risk strategy. So let's say you say this looks pretty good. Low risk. Now we are having 11% drawdown, a win ratio 2.4. But 20% fee is too much for me. So let's go to gross wealth, whatever. We choose it. So 2 months of trading so far, 5%, 11%. He trades Forex mainly. The risk looks relatively good. He has 194 trades. He makes a hit rate of 72%. The risk reward looks relatively interesting and good. So what's the risk about the risk measures? We have 0.26 sub ratio, only 9.59% drawdown. We have a high trading frequency. That could be okay. That is not a big problem. And we're having here like a minimum investment of 1,000 with a fee of 10%. So then we could say, you know what? I'm going ahead and marking me this as a favorite, first of all. Okay. Then you go back and you see it's an algorithmic trading in the Forex area. Then you're looking further and say, I have Forex, I would like to still have an index, for example. And if you have an index, then you see here, oh, what do I have? Low drawdown indice. And we're seeing here someone who makes minus percentage. We don't like that too much. We're having here 1% drawdown so far, 100 invested. Indices trader makes 6%. That looks also relatively good. High risk. Here we have a low risk with 3%. We have a low risk with close to 4%, drawdown 7, 25% fee. Oh my God, no, this we don't want to pay. Um, so we don't find too much at this very moment, right? So then you go further looking for crypto. What we find in crypto, nothing. What we find in algorithmic, here we are finding a little more. Algorithmic is good. This we want to have. So there we want to see still a strategy that we don't have too much to pay. We're going here with a 5% fee, too little reward. No, no, no. Also greedy. Why they're also greedy? It's enough 10% if they collect enough money, for example. You have to think about 30%. You have to pay from the profit. It's not a little, right? It's not a little. I mean, so that doesn't have to be. So let's check the commodity still. If we find there's something, if not, then we find something else. 5%, 8% drawdown, win ratio, with a little invested. So what we could still do is we could think about, okay, we are leaving this area here, flow drawdown, and we're going to low risk. So low risk, high reward, and to trade profit looks good. 36% drawdown is a little bit higher. Fees is okay. Let's check this out. What we have here. He trades since 3 months. Trades traded 417, 59% hit rate. So he has like a very, very balanced hit rate. But what he has good is the risk reward 110 to 68. That looks relatively good. No rules, no strategy, no earn, technical analyzed, priority based, and he's a supervised algorithm, what he's trading, right? So he trades mainly on gold. So that is something that looks relatively good. He made now already 169%, nearly 170. And the minimum investment is relatively small. The fees with 50% we can accept. So we say, you know what? We put you on the favorites watch list. So now let's get on our favorites. How do we get to the favorites back? We go to the copy trading, and then you see here the watch list. And here on the watch list, we have now already collected in the last sessions we did together quite something. And you see that, well, the profit full that we had, he was a little bit struggling now. He has a lot of invested money. And let's look about what he's doing so far. So all time, he has like quite some minus done. And you see he had a good growth, but you see this is what we already criticized last time, that he has really hits when he get hit. And you see the August was for him a disaster. It was really a disaster for him. He did a really, really big loss in August, and he needs now really quite some time to recover again. So he's in total of a drawdown now of all the time of minus 11%, while he was already on 60, 70% up. But the hits that he got, that was really tremendous. So you know what? Unfortunately, and this is also here, you see, he has a good hit rate. He definitely has a good hit rate, but he turns around the risk reward. He turns around the risk reward 0.5. Not a good strategy, right? I don't know why this is a risk score of 1, to be very honest. This is, I really would like to, I have no idea why it's that. And all the guys, all the 500,000 of invested money, they probably have a little bit of a problem right now. They really have that might be really a problem, because the thing is, yeah, it's really like, I mean, he had only 45% drawdown, but he will be having troubles um, to get back, because average profit per trade is 18% versus $18 versus $37. Yeah, here you have to be really careful. Look at the statistics as well. So you know what? He doesn't. I don't want to keep it anymore on um, the favorites, to be very honest. So then we check the next one. Uh, this one here we had on our list as well. What did he do? So all time 3%. So you see also here, it's not really a good one, to be honest. Yeah. So also this one we put off our favorite list, because the profits are just too the profits are too small in compared to the losses, right? Here a big gold loss. It looks a little bit like, mm, how to say, it looks a little bit like, hoping, right? When you look at the profits, they're relatively small, and then comes a loss. He kept them small, so it looks like he kept the position in the gold open to hope that it still turns around. And I'm not sure if this was like, was it a short position in gold probably that killed it, that killed his whole performance? Yeah, he had to sell it back. So yeah, I mean, where's this biggest one? We had a big loser before, right? I saw this. Or was it an open position? No. Yeah, it's an open position, right? He sold gold, right? He sold gold, and now he hopes kind of market turns around and brings him still some profit back. So it could be really like, it could be killing something like that. I don't like this behavior, so I take it off. So, and this is, in my opinion, you have to really go ahead and investigate as well the data. So go in your watch list, put them together in your watch list. For example, this we have already on the watch list quite some time. We take today these two guys. Yeah, we have here in total now 3 markets, and you can here think about whatever you want, but here he fights himself out again. Yeah, so all time still 20%, but also here you see this whipsaws, huge losses sometimes. The worst, the hit rate is not that excellent, and the risk reward doesn't look really good. Yeah, doesn't look really good, unfortunately. So it doesn't look too nice at this very moment. So let me check still the watch list further, what we have there still. So we had the golden treasure, so black, the WTI trader. He had all time, he also has these big hits, actually. Big hits. But he has the when we go in the risk, that looks balanced. That looks balanced from average profit and average loss. When we look in the performance, he did always a profit so far. Profit is declining. Mm, but he's stable. His hit rate is relatively good. He's really good in the hit rate, very, very good in the hit rate. But sometimes he has like some trades that are really like hitting him. And now at the moment, he's in quite some losses here as well. Me right now, so we have to monitor and observe further if he gets another hit now, and it could really cost him quite something of his performance. So we have to be careful. I just go through with you a little bit because it's your money, guys. You have to really investigate carefully. Small money, maybe take really the risk. Take a small risk and try it. But go with traders that are from a drawdown or from the profile perspective, how they're winning and losing. They have to be like, it has to be like quite some interesting. These hits here, they're relatively big. I want to see a profile that looks like this. You go here, like this is a good profile. Maybe a little bit flat, Or sometimes even you go here like big and then you get here small down, tuck, something like this. I would like to see the opposite what we have seen so far, right? So this goes down. I would like to see going to the upside. Then we have a small profile going down, going up again. Rather like having a lower hit rate, but if we are winning, then we are winning high. This is something that we have a great like risk reward at the end. This is what we have seen on the trader here. Unfortunately, he doesn't have too much data yet um, in his statistics, so that we don't really know actually how this is continuing. But we have to observe it, and I think it was no. I would like to see the watch list again. I think it was here either the T2P trader. He doesn't have too much yet. Yeah, this is exactly what we want to see. This looks very promising, guys. You see that? This looks like a promising equity. Big steps towards, then flat, big, flat, big, flat, big, flat, big, flat, big, flat. So you make a lot of small break evens, a lot of small winners, but he's driving then the winners in towards big winners. And this is what we want to see. So this looks for me a promising strategy. Everything that looks like small, bam, small, bam. Very difficult to take a consistency in. Yes, in this time you make really great profits, but when this is coming, it's like feeling like you're building your up like um, um, a big castle of sand, and then comes an elephant and just steps it down. It's like it takes effort to get there. You know what I mean? To build a castle of sand, it's already quite challenging if the sand gets dry. But then if you need a lot of effort to keep everything in space, to keep the sand wet and all these things, right? But then suddenly comes an elephant, boom, and just kicks you everything down. This is something what you really have to be careful. This equity I like. Yeah. So this is definitely a strategy to observe. Also with 417 trades, very solid statistic. And you see the hit rate. The hit rate is not 99%. No, it's 59%. But guys, look, the trades which he will be winning, they're really good. So this like an equity looks really nice and is much more, it's a tiny little bit safer to get in there. This is something what I really love. Yeah. Yeah, absolutely. Perfect. Good. So let's look into the next one. We had another one still inside there, which is DAX strategy. I have put myself in the favorites here as well still. A DAX strategy that looks also relatively good. Yeah, you see here sometimes as well the drawdowns are a little bit bigger, but you see a stable growing. Unfortunately, so far only 2 months of data. But yeah, but that's also looking relatively promisable. Yeah, so we have also the best trade and the worst trade. It looks in a good ratio. We have a very good hit rate here as well. We had in total 64 trades, 74 trades, 10 trades were losing, 74 trades were winning. So 64 trades were winning so far. A little statistic, but it looks promising. It looks promising. So this is what definitely we want to keep. So it could be two strategies that we would like to have on our portfolio for the next session. And we are observing if there is moving something when we are having later on this week, this month still a session together here to see if we are able actually to invest in some of them, right? And also look into the other topics here, right? Go into the best performers. Yeah, look into this one here. Look into the best performers and thinking about okay, what you are willing to accept, to win. Here, 2% fee, EA bot 5. He has like a 33% drawdown, a win ratio of 23, and he has already only a 2% fee. I mean, this is like relatively good. And when we are looking all time, it looks relatively okay from the equity development. So far, 683 trades, 96% hit rate. I could imagine as well that we're getting here a hit soon. This hit rates is usually talking very, very small very small profits span, and maybe keeping some positions as well a little bit longer time open, so that we are like at one point of time maybe the hope is ending in a bigger loss. This is something to definitely be monitored, put it on a watch list, because interesting strategies we want, of course, to see. um okay,